I'd like now to ask Vladimir Potapov to talk to us about the asset management business. And my view is that Russia will have a solid, stable financial markets when there are many more companies, many times the size of VTB Asset Management, because that's where the real capital comes from. Vladimir is also a CFA. And so we're pleased to have a very professional view of what's happening in asset management.
Okay, thank you. First of all, I'm really, I would say, amazed to see such a lot of people in a pretty stuffy room instead of like jumping somewhere and playing football or basketball or badminton or any other good sport on such a fantastic weather. So thank you for coming. Other strange thing that I think it's absolutely I'll be very amazed if you'll hear something new during this dinner, because actually all of you are professional investors, CFAs or whatever, so nobody likely will tell you something new, what you can't read in somewhere from the public sources. So I have a general presentation about some market views, forecasts, and other bullshit, what you can read everywhere, but probably my speech will be a little bit different. A lot of people speak about how to make money on the markets, and we'll see the trend, which was recently about a lot of investors moving to passive investment styles, so some ETFs and index funds, and actually supporting the market efficiency hypothesis, developed by Eugene Fama actually quite a long time ago. And I was lucky to speak to Eugene Fama actually last year on a one-on-one meeting. And actually, not through the public speech, he said one thing. Honestly, I think that, markets are not efficient in reality. And that was a big, interesting thing. And, when you look on the Russian markets, I more and more realize the markets are absolutely not efficient. And a lot of, you can call it, mosaic theories, you can call it fundamental research, or you can do like analysts were wrong. It's actually, it's all about these markets. And if you look, actually a lot of tons of information back to almost any market, and the more you go from the developed markets to emerging markets, and from emerging markets to developed markets, or to frontier markets, the more you realize the market is less efficient. And the ability for asset managers to make money, or to individual investors to make money and to be smarter, is actually becoming from some to a lot. And that's where the real, I would say, the real professionalism or the real story comes. And we live in a unique environment. We live in something between emerging and frontier market. Gives us a lot of opportunities, and the question is how to better exploit these opportunities. And CFA, and thank you for CFA, is a great actually association which gives you all the instruments and all the things which you should know in your mind. And if you don't need to keep it all in your head, you can open the books and read it once again, which help you to find out these inefficiencies. And when you find these inefficiencies, the way how you can play out these inefficiencies is very interesting. And the thing which what this exchange is doing is a big step forward in introducing the new instruments, in introducing the trading, the margins, the options. It was a lot of things, and again, my big respect to what's the MySEC's done in the last couple of years. And I honestly say that in our portfolios, it's one of the biggest allocation in financial markets into Russia, not because they make a lot of money on the rates and whatsoever, which basically a big margin for them, but because the things they did for the infrastructure development is huge, and it helps all the investors, including professionals and individuals, to make money. Other thing I'm pretty interested in, why we all speak English. I can speak English, Russian, a little bit maybe Chinese if you want, but it's want to be really more interactive. Thank you for introducing us. We are by different ratings. We are #1 and #2 Russian asset manager. We manage over 300 billion rubles of liquid assets. invested primarily in the Russian market, both from local and international investors. International investors still exist. Moreover, they keep doing allocations to Russia. If you look on a different, it's not only catched by EPFR rating, EPFR index, which you can track publicly, or it's also, I can say, from the as a active asset manager, the market is interesting. The interests of the investors shifted. Interestingly wise, the most quietest region will be Europe. And differently not US. US is interested. US makes some allocation the way they can. The second will come Middle East. Middle East is very interested in the market, almost from ground zero to pretty active, interest into the market. Second will come China and Asia. But Europe is the quietest. It's like a dry season, mainly because they have heavy fines from the US based on the, some trades they did before with the sanctioned entities, but Europe was actually very active in investing into Russia, and now it's very quiet. So that's a little bit, atmosphere. Locally, we had also a big shift in the investor base. Banks are much more quieter in mainly fixed income market, where they were a dominant investor. It's different reasons for them. I'm sure you know them. But asset managers, mainly pension fund managers, are playing more and more role in the recent placements. We have much more club deals. It's interesting. You can see lots of different interesting placements in terms of the instruments in the near future. It will be inflation linked. It will be with some calls and puts. It's a lot of interesting deals, which will give a lot of I would say, food for analyzing in the nearest half a year, because the market itself is very different from what it was, take it like 3-4 years ago, or I don't even want to mention 2006 or 2007 boom years. The other interesting observation I will tell you, if you are still interested in the Russian market, I think you're right, because the market will exist. The market by itself is huge, as you can see from the size of the country. It can be boom and bust, it can be volatility, obviously, but I don't want to mention the examples of Iran and their market, but I would say the market will still exist and actually can grow in many different circumstances. What you need, I'm sure you understand that, and you know that markets don't reflect the actual statistics which come out. And the worst thing you may look, and the worst mistake is just to look on very good statistics which come out and say the GDP will grow, or GDP will, whatever, go down less, or inflation will be lower, and go and trade the market on this. All the markets, and we go back to these questions of the market efficiencies, is traded on expectations. And how far the reality will be from expectations is really the key backbone of all the analysis which asset managers and professional investors are trying to do inside their own home cookings. So that's a little bit of the regular story. I'm sure you all know this. So I'll give you a little bit nothing new. I'll be some view what's our VTB Capital Asset Management research team thinks. It's a little bit shows you, it's in Russian, so finally we'll go back to the mother language. It shows you the change in the GDP forecast between the analysts and our in-house research. It shows how different it can be, and in general you can see that on the analysts I actually just stupidly adjust their forecasts, even ours, something a little bit better than the market, but in general only adjust their forecasts to actual observed numbers. So in general, we see that the GDP will be, the GDP will fall much less than the gloomy forecast we had in the end of the year. very much helped by the obviously some recovery in the oil market. Some ruble gives some relief to the Russian economy and gives some boost to mainly exporters industry. On the inflation side, you can see also forecast inflation around something like around 12% this year. Yeah, that's a little bit, shows you on the ruble. It's impossible to read, even I can't read from here. So probably, if again, it's not rocket science. I'm sure you know it all. So, but all we can see that again the ruble depreciation together with the oil volatility helped the economy. And we have a big spreadsheet, which actually, again, almost one sell-side analyst had on what's the current account surplus, current account standing, and the budget standing versus the ruble and versus the oil. And it says all this stuff that with the oil staying around $60 per barrel, a ruble at the range 50-55 will not bring a lot of problems to the Russian government in terms of the budget or in terms of the current account. It's not here, but current. I can send this chart. But current account position of the Russia will stay in the surplus. So in general, what we see with the oil at around 60, we see the range at 50-55. That's probably we think will end this year. There was a question again about investment opportunities. We still think that Russia is interesting. That's a little bit on the ruble market, ruble rates, and ruble fixed income. That shows you a weighted carry on the ruble fixed income bonds. Actually, and adjusted to the volatility of the ruble. Carry over hard currency, US treasuries, and we can see that ruble rate, so carrying the ruble adjusted to volatility, is the right slide, is one of the highest, together with India and Indonesia, actually showing that the ruble fixed income market, despite the recent run, is still interesting. Today, I think was the comment that the rates will go down something like 10-11%. Again, the recent placements are the Rostelecom just placed with a yield of about 12% for 2 years. It's, I would say, in my view, a no-brainer from the credit position. So fixed income instruments, short term seems pretty safe and interesting. A couple of words about the equities. What happened in equities recently? Obviously, there will be a big revision into corporate profits or earnings per share. We see almost trough valuation on the forecast on the earnings per share in the last for the 2015 year, really comparable to the previous crisis, 2008-2009. So if you look on the revision of the EPS, and by basically when you invest into equities, don't want to tell you the regular stuff. Two things you need to look on: the multiple. One is important then, and the forecasted earnings of the company. So that's why it's very important. One thing you can trade on the multiple expansion or contraction, and the other thing you can trade or basically on your view versus the analyst forecasts on the earnings per share change. So earnings per share are really depressed level now. We see that the most depressed sectors are steel and banks, followed them from fixed line telcos, and it's also obviously the impact of the ruble depreciation as well on the industries. What we see that we start with a pretty low base now. I will show you on the next slide that the part of the multiple expansion already happened, and equity market already observed part of the recovery. So the multiple went up already for this year to 9 PE. So when you make your decision to trade or not to trade equities, you need to think two things. First of all, whether 9 times earnings for this market is expensive or not. I would probably say not too much comparing to whatever 15, 16, 18s, 19s, what we can see in other markets, or 2 times and some more. But it's not really very cheap. Probably it can go to 10. But the key to think and to look is probably some more changes in earnings per share. So what's needed for earnings per share? It's usually really the economy should start to go back to generate better profits than it was than expected for this year. So, and that's the key, and that's the key question. So we put pretty conservatively around 24% upside for the Russian equity market. Again, but I wouldn't say the market as of now looks extremely cheap, mainly because, again, 9 times of the earnings is, I wouldn't say it's fair, but it's pretty reflects what's now going with the market. The market now in a positive stance, and I would say it will very much depend on future situation around the sanctions, and that will be the key which we can take and realize this 30% to 40% possible growth for the Russian market. If we'll not see, we'll go back to the question of the earnings, and then it's again we go back to another story. It's where the oil will gonna be, how the Russian companies will find the ways and the new, I don't know, how they will work in the environment like now for the next, I don't know, 2, 3, 4, 5 years. That's a little bit of let's put it that way, regular stuff which you can read anywhere. I'm happy to answer any questions if you have one, and thank you.
If I can turn this back on. I have a sort of a meta question about the market. It's, all these things are important in terms of performance of people who are already invested or investing in the market. But as an asset manager, first of all, you have to have assets. And we've had a growing middle class in Russia, but not much of they haven't accumulated assets. What do you think, will we see a very slow, or will we see a normal or rapid growth of middle-class Russians actually investing assets in the equity or in the financial markets? And I mean, as one of the major asset managers, that's got to be the fundamental part of your business. It's nice to have money come from elsewhere, but if it's our money, is it going to happen or not?
Yeah, that's a million-dollar question, which every asset manager who manages mutual funds is asking every time, trying to forecast, to plan the marketing budget for the next year, probably for the last 10 years. And the key trick with I would say with the long-term or like basically savings through the capital markets comes to a couple of the problems. One of the key problems is still there is mainly only one source for the distribution of the investment products. It's mainly banks, and the banks have competitive products. Mainly it was deposits. Now it's actually partly, you can talk that it's a little bit of the investment product there. It's life insurance, which actually actively, I think everybody in this room was probably approached by the life insurance company in the last year, because they realized they can take they can pay to the sales agent 7% upfront and take 15% upfront for themselves. So I'm sure with the 15% margin taken from your pocket, there is a big incentive to sell right away life insurance. It's not I'm not telling you something, some secret. You can read it everywhere. But again, it all comes really to the sources of the distribution, and unfortunately, there is still not a solution with the electronic signature. There is a plan that someday, as you can check your fines for pet parking through so-called Portal Gosuslug. There will be a chance to buy and sell mutual funds and to do investments without the need to go actually to the bank and to open accounts. I don't want to give you a lot of technical stuff, but it's still very pretty, let's put it that way, aggressive environment versus not to do rather than to do an investment. The other big thing will be taxation, obviously. There's big, there's big incentive on the deposits versus the individual investment. But a try was done with the individual счет or individual investment account, which is interesting. It's an interesting try. It's for not. It's really targets this, I would say, mid families. We'll see how it will go, because it started with a one regulation requirement. Now it's going to change. So it's a lot of questions where it will finally merge, because as of now, it's linked mainly to the deposits. So what the banks do, they sell these individual investment accounts just to basically, and sell them as a way to economize on the taxation, extra taxation gain versus deposits. And this loop will be closed. So it's very interesting, but it will finally come to the incentive of the bank to sell it, and what I can see now, it's not really a number one priority for the banks. Saying that the change to the investment products I can see it from the even VTB distribution channel. So I hope it will come. The opportunities are there. The professional managers are there. The track record of Alpha is there. So we'll see. And I hope all we can say.
Thank you very much.
If any more questions, please.
Thank you very much. Any other questions?
Thank you, Vladimir. Interesting presentation. I wonder, do you have any long-term view on oil price, personally or as VTB asset management? And do you see a risk that it stays low for long?
I would say as an asset management, we don't have a view. We more follow the consensus forecast for oil. I think it's one of the hardest markets to forecast. Personally wise, I don't think the oil is low now. And I personally look into the way to play like a Tesla-style investment. So I hope I answered your question.
We will have an expert on oil to take you off the hook on that one. Thank you very much. I hope that we get a middle class, a real wider participation in financial markets. It's fundamental to all of us making a decent living over the next few years.
Thank you.
Thank you.